Ever wished you could see into the future? Well, futures markets won't give you winning lottery numbers, sorry. But they can give you a glimpse into where prices be headed. That's powerful stuff, folks. Whether you're a farmer, worried about soybean prices, or a hedge fund manager juggling billions, futures markets matter. They're like the weather forecast of the financial world, helping businesses and investors prepare for what's coming. Think of it like this. You wouldn't go on a cross-country road trip without checking the weather, right? Futures markets are your financial roadmap. They help you navigate the ups and downs of the market with a little more confidence. So buckle up, because we're about to dive into the exciting world of futures. Alright, let's break it down. Imagine you're a baker, you need flour to make your famous sourdough. But flour prices have been bouncing around like a dog in a park. That's where futures contracts come in. A futures contract is basically an agreement to buy or sell something, like flour, at a specific price on a specific date in the future. Let's say you lock in a futures contract to buy flour at $10 a bag in 3 months. If the market price of flour jumps to $12, you're laughing. You just saved yourself a nice chunk of change, but if the price drops to $8, well, you're still obligated to buy at $10. Futures are a double-edged sword, folks. Futures markets aren't just for bakers, though. They are a bustling hub of activity that attracts a wide array of participants, each bringing their own unique strategies and goals to the table. They attract all sorts of players, each with their own motives. From large corporations to individual traders, the futures market is a melting pot of diverse interests. First up, we've got the hedgers. These are the businesses that actually deal with the physical commodities being traded, like our baker friend who needs to buy flour. Hedgers use futures contracts to lock in prices and protect themselves from the volatility of the market. This way they can plan their finances with more certainty and avoid nasty surprises. They use futures to protect themselves from price swings. For instance, an airline might use futures to lock in fuel prices, ensuring they don't get hit by sudden spikes in oil costs. Then there are the speculators. These folks are in it for the potential profits. Unlike hedgers, they don't deal with the physical commodities. Instead, they try to profit from price movements. They're betting on which way they think prices will move. If they predict correctly, they can make substantial gains. However, the risk is high and they can also face significant losses. And let me tell you, they can be a wild bunch. The thrill of the chase, the adrenaline of making quick decisions, and the potential for big wins make speculation an exciting, albeit risky, endeavor. But here's the thing. Both hedgers and speculators are crucial to making futures markets work. Without hedgers, there would be no real-world basis for the prices. Without speculators, there wouldn't be enough liquidity. They provide liquidity. That means there are always buyers and sellers ready to make a deal. This liquidity is essential for the smooth functioning of the market. This constant back and forth also helps with something called price discovery. Price discovery is the process of determining the fair value of a commodity based on supply and demand dynamics. It's like a giant auction where supply and demand duke it out to determine the fair price for everything from oil to orange juice. Pretty neat, huh? This process ensures that prices reflect the true market conditions, benefiting everyone involved. Now let's talk about one of the most popular futures contracts out there, the S&P 500 futures. This bad boy tracks the performance of 500 of the biggest companies in the US stock market. Think of it as a crystal ball for the overall market. When the S&P 500 futures are up, it usually means investors are feeling optimistic about the economy. When they're down, well, it might be time to batten down the hatches. Traders watch the S&P 500 futures like hawks because they can give early clues about where the stock market is headed. Section 5. The good, the bad, and the leveraged. Weighing the pros and cons. In this section we will delve into the various advantages and disadvantages of engaging in futures markets. It's crucial to understand both sides of the coin before diving in. Futures markets can be a powerful tool, but they're not for the faint of heart. These markets offer significant opportunities, but they also come with substantial risks. Let's explore the benefits first. On the plus side, they offer leverage. Leverage allows traders to control a large position with a relatively small amount of capital. This means that with a small investment, you can potentially make large profits. You can control a large amount of an asset with a relatively small amount of money. This can amplify your gains significantly, making futures trading an attractive option for those looking to maximize their returns. That's like having superpowers, but with potentially supersized losses too. While leverage can magnify your gains, it can also magnify your losses. It's a double-edged sword that requires careful handling. Another advantage is hedging opportunities. Businesses can sleep better at night knowing they've locked in prices for their raw materials. This price certainty can help companies manage their budgets and plan for the future with more confidence. Price transparency is another benefit. Futures markets are like open books, showing you exactly what buyers and sellers are willing to pay. This transparency can help traders make more informed decisions and understand market sentiment better. But there are risks too. Volatility. Futures markets can be highly volatile, with prices swinging wildly in short periods. This can create opportunities for profit, but it can also lead to significant losses. Prices can swing wildly, which can wipe out your profits faster than you can say margin call. The rapid price changes can be stressful and challenging to manage, especially for inexperienced traders. Complexity is another downside. Futures contracts can be confusing, especially for beginners. The terminology, strategies, and mechanics of futures trading require a steep learning curve. Without proper knowledge, it's easy to make costly mistakes. Potential for big losses is another risk. Remember that leverage we talked about? While it can boost your profits, it can also lead to substantial losses if the market moves against you. It's essential to use leverage wisely and understand the risks involved. It can work against you just as easily as it can work for you. In conclusion, futures markets offer both significant opportunities and substantial risks. By weighing the pros and cons carefully, you can make more informed decisions and navigate these markets more effectively. Section 6. Who's playing the futures game? You'd be surprised. You might think futures markets are just for Wall Street suits, but you'd be wrong. Sure, you've got your big-time players like hedge funds. These guys are like the sharks of the financial world, always on the hunt for profits. Investment banks. They help facilitate trades and offer futures contracts to their clients. Corporations. Remember our baker? Lots of businesses use futures to manage their risk. But there are also plenty of individual investors, farmers, and even airlines using futures to achieve their financial goals. So, no matter who you are, there's a good chance futures markets can play a role in your financial life. Section 7. Ready to dip your toes in? Start here, future trader. If you're thinking about diving into the world of futures, here's what you need to do. Educate yourself. The first step is to immerse yourself in learning. Read everything you can get your hands on about futures markets. Knowledge is power. Start small. Don't bet the farm, literally, when you're first starting out. Begin with a small amount of capital that you can afford to lose. Choose a reputable broker. Look for a broker with experience in futures trading and a strong track record. Develop a trading plan. Don't just wing it. Have a strategy in place before you make your first trade. Remember, futures trading is not a get-rich-quick scheme. It takes time, patience, and discipline to succeed. But with the right approach, it can be a rewarding way to manage your risk and potentially grow your wealth. If you're thinking about diving into the world of futures, here's what you need to do. Educate yourself. The first step is to immerse yourself in learning. Read everything you can get your hands on about futures markets. Knowledge is power. Start small. Read everything you can get your hands on about futures markets. Knowledge is power. Start small. Don't bet the farm, literally, when you're first starting out. Begin with a small amount of capital that you can afford to lose. Don't bet the farm, literally, when you're first starting out. Begin with a small amount of capital that you can afford to lose. Choose a reputable broker. Begin with a small amount of capital that you can afford to lose. Choose a reputable broker. Look for a broker with experience in futures trading and a strong track record. Develop a trading plan. Don't just wing it. Look for a broker with experience in futures trading and a strong track record. Develop a trading plan. Don't just wing it. Have a strategy in place before you make your first trade. Have a strategy in place before you make your first trade. Remember, futures trading is not a get-rich-quick scheme. It takes time, patience, and discipline to succeed. Remember, futures trading is not a get-rich-quick scheme. It takes time, patience, and discipline to succeed. But with the right approach, it can be a rewarding way to manage your risk and potentially grow your wealth. It takes time, patience, and discipline to succeed. But with the right approach, it can be a rewarding way to manage your risk and potentially grow your wealth. So take the plunge, but do it wisely. Equip yourself with the right knowledge, start small, choose a reliable broker, and have a solid plan. The journey of futures trading is not a sprint but a marathon. Stay committed, stay informed, and stay disciplined. Happy trading. But with the right approach, it can be a rewarding way to manage your risk and potentially grow your wealth. So, take the plunge, but do it wisely. Equip yourself with the right knowledge, start small, choose a reliable broker, and have a solid plan. The journey of futures trading is not a sprint, but a marathon. Stay committed, stay informed, and stay disciplined. Happy trading. Section 8. Futures. Not just for farmers anymore, so there you have it. Futures markets might seem complicated at first, but they're really just a way to buy and sell things at a future date. They can be used for hedging, speculating, and even getting a sneak peek into where the market might be headed. Whether you're a seasoned investor or just starting out, it's important to understand how futures markets work. They play a vital role in the global economy, affecting everything from the price of your morning coffee to the value of your retirement account. So, keep learning, stay informed, and who knows, you might just become the next futures market guru.